This episode of Landlording for Life is brought to you by our good friends at Audible.com. Get a free audiobook download and 30-day free trial at www.audibletrial.com/landlording for life. With over 180,000 titles to choose from for your iPhone, Android, Kindle, or MP3 player, you'll find the perfect real estate investment book for you. Now on with this week's podcast.
This is the Landlording for Life podcast, where landlords explore their success and stories of failure while building a foundation to improve upon. Here's your host, Sean Morrissey.
Hey everybody, welcome to the Landlording for Life podcast for this week. This is your host, Sean Morrissey, and thanks as always for tuning in to another podcast of Landlording for Life. So this week we have on the line with us a gentleman by the name of Eric Workman. Now, Eric works for Renovo Capital, and Eric has been a private lender for some time. So we figured we'd do a podcast today for those of you that are really just getting started to talk about what private lending is, kind of the pros and cons of using a private lender, and at the end of the day, I suppose how Renovo can help you in leveraging your real estate investment and grow your portfolio and all that good stuff. So Eric, welcome to the podcast. Thanks for being on.
No, thank you, Sean. Appreciate the invitation.
Yeah, absolutely. So, Eric, let's dig into it a little bit here. Tell us a little bit about yourself, your background, and how you ended up where you are today.
Sure. So, I graduated college from University of Illinois about 14, 15 years ago now. And I graduated with a finance degree, but with a concentration in real estate. Whenever I was going through school, the stock market, the bond market, those types of investments never really spoke much to me. But when I had professors who would speak about real estate and who would teach about how you use real estate as a wealth building tool, how you can buy an asset, let somebody else pay for it every month for you. You can generate passive income. You can build equity. That really spoke to me. So I knew coming out of school that I was going to go into real estate. But we were in the new construction boom at the time. And so I actually came out of school, started working in the new construction industry, doing sales and marketing for a large public home builder. Things went great, as they did for most people in that space for the next 4 or 5 years. And then in 2009, whenever all the music stopped, I kind of went back to my educational roots, got my broker's license, and started working heavily with investors, finding foreclosed properties, renovating them, selling them as flips, and renovating some to rent and building rental portfolios. Over the course of the next 6 or 7 years there, right up until early 2016, I was part of a couple thousand flip or buy to rent transactions here in Chicagoland.
Wow.
We had a really, really fun run kind of through that time. And it's something that I tell a lot of real estate agents whenever I am kind of speaking to different brokerage offices or doing different trainings. It's something that I say to a lot of investors as well, is that it really doesn't matter what's happening in the real estate market. There's always a side to be on and always a side to make money. Even in the downturn or even as we were coming back up, there's always opportunities to make money. And, thankfully I was able to kind of find my niche. But my partner and I on the real estate side, we actually were introduced to Renovo in late 2015, early 2016. We were working with Renovo on setting up a capital line for ourselves. Okay. For some of our own projects. And I got to know the people here well. I got to know the co-founders well. And the founder of the company is a gentleman named Kevin Werner. And I just started talking over the next handful of months about whether or not I would be interested in coming aboard. And middle of 2016, I kind of joined the ship and have been leading our marketing and growth strategies here for the last couple of years.
Okay, awesome. So I think what's unique about your story is that you're actually a guy who was out there in the field doing this stuff, right? Doing the fix and flipping and getting a hands-on, hands-on experience along the way before you made your transition to Renovo. Is that fair to say?
Absolutely. Yep.
Yeah, awesome,
Sure.
man. That's great to hear. All right, well, tell us a little bit about, I guess Renovo, because I consider Renovo a private lender, right? Not a hard money lender, I suppose. And I was hoping you could
Yeah.
differentiate between those two. Maybe what is a private lender, what is a hard money lender, as opposed to traditional bank financing.
Sure. Well, whenever I think of hard money lending, normally there's a couple of things that come to mind: either a baseball bat or the trunk of a car.
Yeah.
Right.
Yeah.
And hard money, as I think, kind of it's been painted with this really broad brush, and it just has this really rough moniker to it of, being something that's only for people who are either desperate or who aren't able to be financed other places, which is not the case for our borrower base. The average Renovo borrower does between 6 and 15 projects a year, and most of them have $1 million balance sheets and well over 700 credit scores. The typical Renovo client, I shouldn't even say typical, the vast majority of Renovo clients are very bankable people, but they use Renovo, again, like you referred to us as a private lender. They use us because our ability as private lenders, one, we're not forced to some of the same regulations that banks are, and two, that allows us a level of flexibility, creativity, and speed as it relates to structuring deals that other regulated institutions just don't have.
Okay, very good. And that's a good segue to our next question, because really what I wanted to dig into with this podcast is, what are some of the advantages of using, Renovo over traditional bank financing? Now, you had mentioned, there's certain regulations or restrictions you may not necessarily have to play by, and I suppose that would be a big one. But can you go into detail in regards to maybe what some of those advantages are, or go into a little more detail in regards to some of the things you don't have to do that traditional banks have to?
Sure. Well, we're structured in a way, the only thing that we do is lend money to residential real estate investors. That's it. So that is our sole focus.
And when you say residential, you mean 4 units or less?
No. Just last week we closed on a 62 unit deal in Oak Park. So I just mean that no office buildings, no hotels.
Got it.
And anything that's mixed use, we need more residential square footage than commercial or retail square footage.
Okay, perfect.
So, yeah, that's what I mean by that.
Okay, sorry to interrupt. Go right ahead.
No, that's okay. So, we have structured ourselves to serve the needs of real estate investors. And when you talk to real estate investors, when you look at the business that they're trying to build, and there are a lot of varieties, right? You have fix and flippers, you have fixed to rent, you have guys who build spec new construction. There's a lot of different business models that can kind of be in the overall real estate investor bucket. But we've set ourselves up so that we have the highest level of efficiency and ability to get things done that consumer segment of ours needs.
Okay.
Because when you talk to a real estate investor, there are things like they need to be able to move quickly, right? A lot of times, especially in today's market, deals come up fast and you have to be able to say yes. Today's the 4th or the 5th. Hey, can you close by the 15th? This deal just fell out. It's yours if you can close by the 15th. Well, with a lender like Renovo, we can do that. We can close a deal in 10 days or less.
Beautiful.
Most banks, banks can't, right? We have credit committee 2 times a week. Some banks only have credit committee 2 times a month. So you got to be able to move fast for real estate investors. You have to be able to underwrite with a real world lens, meaning real estate investors' cash flow can change pretty regularly depending upon their, the number of projects that they have out. Their tax returns can be complicated to get through depending upon the number of LLCs they have, et cetera, et cetera. You have to be able to underwrite knowing how they run their business, which again, some other banks, whenever you take a look at debt to income ratios, et cetera, they have to clear certain hurdles or it's just an automatic no.
Got it.
For a place like Renovo, that's not the case. And then you have to be very flexible in the way that you structure deals. A lot of banks these days, if someone's not putting 25 or 30 or 35% down, it's just an automatic no. Well, can we do it with 15% down and the utilization of some additional collateral? So can you help that real estate investor get the deal done so that they get the project and they make the money? And the answer for us is we're going to get to a yes as quickly and as safely as we possibly can, but we're not going to look for ways to say no, which is what you traditionally find with a number of more regulated lending institutions.
Makes good sense. And would you say at the end of the day, you tend to get a lot of your client base after they approach your traditional bank and they get that no from a traditional bank, and then you're able to find a creative way to make it work that the banks weren't able to?
No, I wouldn't say that, because look, I mean, the banks are still our friends, right? And they're going to be, and we refer a lot of deals back to banks.
Really? Okay.
Somebody who's, they buy the building with us, they renovate it with us, and then when they decide they want to keep it, and they've got a 6-unit or 8-unit or 12-unit building, then that's up and it's renovated and it's tenanted and cash flowing. Now you take it to a bank, because that's a lot easier project for a bank to say yes to. Or a developer wants to buy a lot, tear down the house that's on it, put up a condo building. And the bank says, we'd be a lot more comfortable once you owned the dirt and had the permits in place. So they use us to buy the property, tear down the existing structure, go through the permit process, and then the bank comes in. So there are a number of ways in which banks that we work together with banks. Our biggest referral source, and when people come to us, is from our existing clients and from the realtor/commercial broker community.
Okay.
People come to us because they know of other investors, or because people in their circle of influence, like their broker, their attorney, what have you, say, call Renovo, they will get the deal done.
Okay.
And beyond just getting the deal done, we bring a lot of other things to the table, whether it be relationships with material suppliers, relationships with inventory sources, ways in which we can help your business save money, or ways in which we can help you get more inventory. And then beyond that, like, the rest of our company here is structured around the needs of the investor. So we can do draws in 24 hours. All of our loan servicing is done in-house, so there's not an 800 number or somewhere overseas to call whenever you have a question about payment or payoff or what have you. So, we've built a service engine here that's structured to make sure that real estate investors' lives are running as smoothly as possible for their business.
I love it, man. You did a great job of laying those out. Just a number of advantages that your traditional bank can't provide. That's beautiful. That's beautiful stuff. Let's talk about a little bit on the fees end, right? Or anticipated fees. Whenever you use, in this case, let's say Renovo, or any kind of private lender. What do you typically see on any particular real estate deal?
Sure. Well, it's going to vary greatly depending upon the quality of the borrower, the quality of the project, and really the amount of time that you need the money. The faster we put the money out and get it back, the lower the interest rate we can charge, right?
Okay.
Everybody has an annual return that you're trying to get with your money. But look, with most private lending sources, you're going to be a couple of points whenever you take out the loan, and whether that's all up front or whether there's some up front and some whenever you pay off. It's just all a matter of structuring. And then anywhere between 9 and 13 or 14%.
Okay.
For an interest only, acquisition or rehab loan.
Okay, got it. So at the end of the day, the fees are really tied into the length in which the borrower needs the money. And I suppose, would it be different based on the amount of rehab that has to be performed to any particular project?
It could be. It really
Okay.
is so project and borrower specific.
Yeah. Okay. Very good. So let's talk about qualifications a little bit. When it comes to underwriting, what are they looking for in terms of qualifications from a borrower?
Well, what I always tell people is that experience and financials are really the two halves of the scale, right? If you don't have much experience, then the stronger your financials are, the more comfortable that we will be. If you have a significant amount of experience, then the more comfortable that we could become if your financials aren't as great.
Okay.
Whenever you look at a deal like Renovo typically finances, it's either a house or a building that's in need of repair, right? It's a construction project.
Yep.
And so the highest predictor of whether or not when we lend our money out, we will get it back isn't necessarily the borrower's credit score, but it's their experience in doing these types of projects.
Okay.
So experience for us of the borrower is almost number one on the list. Experience or quality of their team is right up there as well. And then, of course, we are a lender, so income, credit, other financials are always going to help.
Okay, so let's dig into experience a little bit more. What would you define as the kind of experience you're looking for in terms of objective measures? Like, is there a particular amount of years or a particular amount of projects you want to see completed successfully?
Well, we would definitely like to see successfully completed projects.
Okay.
That's better than none, right?
Okay.
Or brand new. If somebody comes to us who's never done a project before, then hopefully they've got an incredibly stout balance sheet and a general contractor or investment partner who has a tremendous amount of experience. It's not like, well, you have to have 3 completed flips in order to come and work with Renovo, but the more the better.
So if they don't have that project completed, it sounds like the best thing they could do is partner up with somebody who has that experience.
Partner up with someone who has that experience, or hire the most long-standing, successful general contractor that you can find.
Okay.
Who's got just a stellar track record and who we can vet. Which is something that we do anyway. The contractor piece and the team that an investor comes to us with is something that we vet on a deal by deal basis.
Okay, very good. So, this question's a little bit off script, but I think you'll handle it well. How should an investor present their project to you? What are you looking for? Is it going to be, on our rental properties, is it going to be the last 12 months of a rent roll and P&L, things of that nature? What specific documents do you like to see?
No, so a lot of times what we look for at the beginning is, comps for what they believe that the project or property will be worth at the end, and then what their scope of work is. We have a whole process that investors go through whenever they call into one of our loan officers. They have a way to submit their docs online, and they can, send us over the address, and we have different credit analysts who, take a look at the project, et cetera. On a rental project, a lot of times people are coming to us with properties that are in need of repair in order to raise the rents and then get the property occupied. Okay. So, an existing rent roll isn't near as important to us as what the as complete rent roll might be. Okay,
that's good to hear. I'm thinking of a project off the top of my head right now where on the surface, the rent roll the rents are very low, right? I don't think they've been raised in freaking 15 years, to be quite frank. So the numbers on the project don't look particularly attractive. But when all is said and done, it'll be a cash cow. So I guess it's good to hear that the after repair value or the after rent value is considered heavily. Cool. All right. Well, moving right along. What would you define as the perfect client for Renovo at this point? What would be somebody that is just a slam dunk at the end of the day?
The perfect client for Renovo would be somebody who has a track record of success in completing, flip or buy to rent type projects.
Okay.
Who is looking for a dedicated capital partner because they know that what's most important to their business is that they spend time finding deals and managing the projects that are in place, not going out and trying to find money for every new project. Someone who values relationships, even necessarily over price, and someone who knows that having a committed capital partner who is there for you whenever the deal is there. And they value that above most everything else.
Yeah, I think so. Go ahead. Sorry.
Yeah. So, someone who's experienced, who's looking for the right capital partner for growth, and who values that committed relationship from us to them. Because when you look at our most successful and most active clients, they have anywhere from $1 to $7 million lines with us, where we've committed that capital to them on an annual basis. And, they're busy out there managing the projects that are in place and finding the next one. And when that next one comes, they call up their guy here, whoever their senior loan officer is, and says, hey, I just picked up 123 Main Street. I'm sending you over the contract. And then, they're closing in 10 days. And then they're able to call their same asset manager and say, Kyle, I've completed the demo on 123 Main Street. Can you come out and check for me? Kyle gets out there and checks, and then the draw money is in their account in 24 hours.
Okay.
And they build our relationship into their business, and that's what they're looking for. That would be the ideal client for us.
Okay. So one thing we didn't mention when we were talking about advantages is it sounds like you're going to value relationships over time much more than a traditional bank would, in my opinion. You think that's fair to say?
Oh, yeah. Okay. Yeah. Our company is built on a platform of service and relationship. We take our service here so seriously that, we survey each project 3 different times: when the buyer closes, halfway through, and then whenever they pay off. And we push for the buyers to be as honest as possible, not buyers, but our borrowers to be as honest as possible in every single one of those surveys. And then every person in our organization gets the results from every survey. So everybody from servicing through origination gets the results of every survey. And then what we do is we publish the results of every survey. We put it for the entire year. We put it in a book and we hand it out to all of our clients and prospects and, referral partners.
Beautiful. Okay. Very good. So always looking for feedback. That's always a good thing. So let me ask you this. What's, for those listeners that have not used Renovo or picked up the phone and talked to you guys yet, what's the best way for listeners to get started? Is it to find a deal first, or is it always better to maybe call the office first, learn about the products, and then find the deal?
Really kind of depends on, again, the borrower. If they're relatively new and they need to know, hey, will I be able to get financed? It's a great idea to give us a call and have us, sit down and go through what your business plan is, go through, what your financial structure is, go through who your team is. And then, if we're able to finance you on a deal that you find that kind of fits a box that we agree upon, then we'll issue you a letter of credit and you can go out and start shopping. But one of the things that I would say is that it always benefits us and then benefits the client in the long run to take the time to really sit down together and go through their business plan, what their buy box is, why is it they're in real estate, what their successes and failures have been thus far, et cetera, versus just calling and saying, hey, I've got a deal. Can you close it in 10 days? Because if you're new to us, the answer would be yes, we can, but not without not without coming all the way back to home plate and starting here first and taking the time to very intentionally go around the bases with you before we get to closing.
That's a beautiful thing. I mean, it all comes back to what, folks might call like a red button statement, or, what are your big ideas or big goals whenever it comes to real estate investing. So in the long run, you're focusing on that end goal rather than a per project, where are we going to end up at the end of the day. So that kind of consultation would be amazing. Well, yeah, let's dig into the three questions we ask everybody at the end of every podcast. The first of which is, what would be a book or website you might recommend that you use on a regular basis that you'd recommend to our listeners?
Well, how many times has a guest said "Rich Dad, Poor Dad"?
Yeah, you wouldn't be the first, but
yeah, I would imagine I wouldn't be. But I think everybody actually should read that book, just from a how to structure your life financially and make sure that you end up with more at the end of the month than you've given away. But my favorite author is Malcolm Gladwell. And so, a lot of folks know the book, either Tipping Point or Outliers, but my favorite book of his is a book called What the Dog Saw. And it's a compilation of his articles that he wrote in the New Yorker magazine over the course of like 10 years. And it's just an absolutely fascinating book. Loved it.
Okay, fantastic. We'll have to check that one out. Now, what would be one piece of advice you'd recommend to our listeners based on your years of being an investor yourself and now doing it as a profession? What would be that one piece of advice they should take moving forward?
Try to buy a house a year.
Okay.
I think whenever I look down the road, I'm 36 years old. And, most of my friends are, roughly the same age. And it's, when you think about like, well, how would I retire in 20 years? Or how am I going to retire in 20 years? When you think about college educations and all these other expenses and things that are going to be coming up in life, and not to mention just how expensive life is. And the only way that I know how to do it, is to save up the money and buy a property every year if you can, or every 2 years, whatever it is that you can save to do. But to buy a property, put a good tenant in there, and take care of that property and take care of those tenants for as long as you can. Pay down the mortgages as quickly as possible. And if you wake up in 20 years and you own 12 or 15 houses, you can be looking at, somewhere in the neighborhood of, with rents at that time, probably $20,000 to $25,000 a month in rent that comes to your door. That's the only way that I know how to effectively retire.
Well, and I'm right there with you. And again, it kind of goes back to looking into like the internal rate of return, right? Of owning real estate versus, let's say, stocks and bonds or something of that nature, where at the end of the day, it just can't be beat because there's multiple ways in which you're building wealth over time. And, I think if folks seek that kind of depth from real estate investment, it becomes it just becomes a no-brainer.
Yeah. I tell people, like, the conventional wisdom, or they say, is like 3%, right? You can withdraw 3% a year from whatever it is you have saved. And if, when it comes time to retire, you want to live off of $150,000 or $180,000 a year, like, that means you need $5 million.
Yep.
So between now and 20 years from now, how are you going to save $5 million? Well, that's going to be pretty hard for anybody to save that kind of money, unless you get incredibly lucky in the market or with some sort of stock. But it's pretty easy, actually, to save up $20,000, $30,000, $40,000 over the course of a year or two and buy a property that when you look 20 years down the road, you have 15 or 20 of them that are worth $5 million. That's something that can be done.
Yeah, absolutely. And it's always important to remember that the price of real estate is keeping up with the price of inflation. So you've got to find an investment that is going to hedge inflation over time. And, that $5 million doesn't necessarily account for inflation over that time frame, and what you're going to pull from it annually. What's that going to buy you in 20 years? So anyways, well
Sure.
said. I appreciate your thoughts there. Final question is, what's the best way for our listeners to contact you should they have further, interest in working with Renovo, or maybe just want to pick your brain in regards to, perhaps how you can help them down the road?
Sure. Well, my direct line is 630-408-5582. And my email address is Eric, ERIC, at renovofinancial.com.
Awesome, Eric. Well, thank you so much for being on the podcast. You're incredibly well spoken, and it's not too often I have an interviewee where I'm like, boy, I'm going to go back and I'm going to edit nothing. This guy nailed it, so I appreciate it.
Yeah. Well, Thank you for that. Really appreciate the invitation.
Yeah, absolutely. So if you have any other questions, feel free to contact Eric directly, or you can always post on our Facebook page. Otherwise, thanks as always for tuning into this week's episode of Landlording for Life, and we'll see you soon with our next episode. Thanks again for being on the podcast, Eric. We'll talk to you.
Thank you. Bye-bye.
Thanks for listening to another episode. If you like what you heard, leave us a 5-star review and join our Facebook group to share your deals and ideas by searching at Landlording for Life. See you next time.